On our last public swing trade experiment video, we caught over 600 pips. That's worth over $6,000 if you're using a single standard lot size on most of the brokers that we're referencing, literally in 20 minutes, free, live on YouTube. That's crazy, right? Hello everyone, and welcome back to the channel where we're showing you that trading is as easy as you make it on yourself, right? Obviously, this whole Tuesday night thing we're doing is just meant to be a 4-hour trading experiment. We're still kind of working on some of the management rules just to show you that trading literally is as simple as you make it. And most of the nuanced mistakes and the little behaviors that people run into and the losses are mostly, for the most part, theoretically, right, avoidable. Obviously, I have to start off with our disclaimer that says, please know everything we talk about on this video and in any class is not meant to be financial, legal, or investing advice. You are 100% responsible for the decisions you make in your trading accounts. Please, 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 please follow along with these videos. If you don't know anything, if you do know everything, then take some of these setups, go look for your own self, look at with your own 2 eyes, take a look, see if that analysis lines up with your bias, take it in a demo trading account, right? Go to a paper trading account. If you don't have a broker, please do go to the link tree in the YouTube description, pick any one of those brokers. They are affiliate brokers. It helps me, but it doesn't cost you anything, right? Just build a community within those brokers. And there's like some mutual discount fee supposedly and all that other good jazz. But I digress. Please, please, please make sure you go follow along with these trades. Look how simple this can actually be. So disclaimer aside, I do want to just stop for a second on this. We know that we know that we know there are differentials, huge differences between brokers, countries, currencies, and everything else in between. So when we're referencing a pip, we're referencing the value for the most part on Hugo's Way specifically. That's how we're counting those, whether it be an index, an exotic, or a Forex pair. No matter what instrument, this is the one that we're kind of using just as a way to normalize it because we do know that they're worth different amounts on different brokers. So that's all, well and good, but that's where we're getting all that from. Without further ado, let me see if this is going to pull up the right way. Oh, it did. Perfect. Nice. Hold on. Check that out. But this is what we've been doing live on this little YouTube public 4-hour experiment. The only idea that I'm hoping to gain from this is to show people that trading is a way to potentially buy back their freedom, buy back some peace of mind, not necessarily a Maserati, not looking to build a new, nation somewhere, although that's possible too. I'm just talking a little bit of financial freedom, a little bit of time freedom, a little bit of mental freedom to live life on your terms. That's really the goal here, right? Not to buy another job, not to have another reason to work 24/7, but just to buy back your freedom. And that's what we're doing here. So trading doesn't have to be overly complex. It doesn't have to be impossible, although the market's available 24 hours a day and there's 24 bajillion instruments to choose from. It's no wonder that people get tripped up. We started this a couple of weeks ago after stopping the simplicity system that we were doing just to say, hey, this is the same system we use in our morning calls. Granted, I don't use the 4-hour system for that 4-hour time frame. But in that time, this is what we've accomplished. Of course, you can go back on YouTube. All of those calls are recorded. They are publicly available. Go take a look. Go say, hey, wait, did this play out like they said it would? Did this, hit a stop loss? How would I have managed this to be able to profit some, all, or none of this trade, right? In general, let's see. We're saying, hey, number one, make sure you're protecting. We're protecting your trades within 25 to 50 pips. We do need to get that back on here. No matter what, you're protecting your trade within 25 to 50 pips of profit. In my perfect world, in Jenny's little bubble, I would say please use ATR as a calculation. But because I know not everybody is there, we're saying 25 to 50 pips. And the reason why that's such a big fat window is because, well, gold moves to 300 pips a day. CAD JPY moves, 80 to 100 pips a day. That's a pretty big difference, right? USDMXN's an exotic. It moves a boatload a day, but it's worth less. So with that in mind, I'm just trying to create a round number that new people can use and say, hey, wait, I understand, I get it. So no matter what, all circumstances, you're protecting your trade within 25 to 50 pips. Also, your stop loss is 100% up to you, just like how you manage it is, right? However, I would say I'm always using structure. When we first started this, I was going to say one fractal back. I personally don't like one fractal back. I'm not the girl who wants to choke out my trades to where they can't breathe. I feel like that's a recipe for disaster. I would much rather find a setup that I believe in and can count on and let that thing have room to run up and down and all around and then go the direction I think it's going to go than have 500 trades where I'm choking it out. And I'm like, oh my gosh, my stop loss is so good. I've got my 10 to 1. Look at me go, woo woo. But I get knocked out of all my trades. That does not work for my psyche, does not work for my mental health, and I hate it. So with that said, stop loss is up to you. I'm saying structure. Now, how we define that as a group, as a duplicatable system for everybody live on YouTube and anywhere else, give me 2 more weeks. I'm taking a vacation here soon, and when we come back, we'll finalize it. But in general, yes, you're looking at structure, and we'll show you what that looks like on the chart. Otherwise, use a couple of fractals back plus a cushion. The cushion gives the market room to do a news, spring, to do a wick, right? To do one of those little stop hunts, right? And just one of those little grabs for liquidity before it goes in your direction. It also can make you lose a little bit more. Again, back to my way of being, I don't mind losing a little bit more because of the amount of times that I win. So last week, as I'm sitting here talking with my hands like y'all can see me, last week, we looked at quite a few. Well, we only looked at a couple of trades last week. We got over 635 pips. Guys, at the smallest lot size, that's still worth quite a bit of money, right? On average, if you're using, like, for example, a 0.1, depending on the broker, I know that this is subjective, that's worth $6,000. If you're using a standard, that's worth $68,000. Well, 65 in this case, $63,000 in this case. That's absolute insanity. Sorry I did that math bad at first, but you guys get the idea. That's a lot of pips. If you only caught half of that, that's more than most people make in a month. That's more than most people make even with a bachelor's degree. That is not a bad way to be. So that's what we've done so far. We've got a couple of trades to look at today, and I'm excited to go look at those real quick because I've showed the good, the bad, and the ugly. I'm going to show you where we're at. So in our public morning, this is part of our membership, right? Our community that we're building. We've got over 215,000 pips thus far this year. That's, again, worth an awful lot. This is the lot size for the most part that we're using. That's where this value is coming from. That means in half of a year's time, if you caught these pips, you made that as a minimum. And that's with the smallest lot size, by the way, on most of those pairs. That's crazy. Granted, you can catch 10 times more than these, and some of these pairs moved way, way more. I will also note, check out last week. I had a, 87% accuracy. So we won 6 trades, lost 1. But in pip count, right, that was a whammy. It was a big one because it's US 30. It has a lot of pips. But if each one of these trades, for example, is 5%, you still got plenty of a percentage of a gain on your account. But I just wanted to show the good, the bad, and the ugly. We are killing it in general. We're doing really good in terms of how many pips we're getting on a week-to-week, month-to-month basis. We've had some really big ones and a couple of small ones. But that's where we're at. If you're interested in working with us and you think you're a good fit, then by all means, go to the link tree. Otherwise, stay on YouTube. That literally costs you nothing, and you can come along with this journey with us and see where you can get. Let's go take a look at these charts. Okay, before we even get started, we have to at least acknowledge we've got we've got an interest rate news tomorrow morning. So please do trade this with a grain of salt. Please do make sure you're babysitting your trades a little bit. You're protecting them in terms of when you're in profit. Please don't let them just run all willy-nilly without any management. It's a recipe for disaster, and it is a great way to occasionally make a boatload of money. But more often than not, it's a great way to lose your entire account. So don't do that. We don't know what the chairman's going to say tomorrow. We do have an anticipation that the interest rate's going to go up, but we don't know how the market's going to react yet to it. I assume the US dollar is going to strengthen, but we'll see because price has not been following the same kind of technical or fundamental patterns that it has in the past, at least not in my opinion. So first things first, I had to change this one just to kind of stay true to form in terms of week to week, but we had 2 purples. So we had AUDCHF and GBP/JPY, and this was still blue mostly because we had a carryover. So these were the trades we looked at on the 11th. That's the one we were looking for the buy. Okay, upon continuation with Jenny's golden strategy, this is where we're looking. Remember, structure's down here. Now, how far is going to be up to you, but this is 1 fractal back plus a 25 pip cushion to give you an idea. We never came into that range, and take a look. We moved a total of 200-ish, pips. Sorry about that circle in the way. Not a bad way to be. Not a lot of drawdown, not a lot of anything. That is sheer profit. I would again say, hey, you're up 25, 50 pips. You're up 1 ATR. By all means, please do protect that trade. You can do so by closing out a portion of your trade. You can do so by putting a trailing stop, by putting your stop loss in the profit, or just closing the entire thing. All of those methodologies work, right? All of them do. But please do pick one. So let's clear this board. Remove all. Got it. Maybe. We're going to take that off of our watch list. So WW. Oops, put it back on. There you go. That was our trade review from the 11th. We do this to show you that, because when I show you the next trade, you don't know whether to trust it. You don't know if you like the analysis. You don't know anything. But we review these to say, hey, look, this is what we saw last time. This is how they played out, the good, the bad, and the ugly. This is what we're seeing this week. Now, actually, please do consider this. JPY, we've been waiting on that retracement for a hot minute on multiple pairs. We did get some, not nearly as much as I was anticipating. As you can tell, this has been 2 weeks. That's a long time. So what is that, 150-ish pips, right? 154-ish pips, something like that. We came down, we came back up, we came down, came back up. We're still sitting above. It is what it is. So 154 pips in total, give or take. Again, we should be protecting, closing, or doing some kind of actionable decision in that time frame. But there we go. I'm not looking to sell this again just yet. I do think there's potential to the downside, but not right now. That is GBP JPY. And of course, EURJPY we looked at 2 times in a row. So we popped up, we waited again. This is where we were on the second week that we looked at it. So from here, we knew about this trade all the way back here. If you're using a stop loss as structure, you made a decision once and then you went on with your day. You might take multiple entries and then it's all gravy. If you're constantly getting knocked in and knocked out, knocked in and not knocked out, to me, that's a headache. Needless to say, from where we originally looked, this has moved an awful lot. 430-ish pips, give or take, from where we again looked on the 11th. I guess that's the 12th this time. But there you go. That is 270-ish pips. Not a bad way to be at all. 270-ish pips. Not a lot of drawdown either. Minimal drawdown on that pair. Very, very minimal. So we're removing that off of our board and taking this off. And before we go into the next trades, again, I'm going to preface, there is interest rate news, interest rate decision tomorrow. Anything US dollar based, but really most of the market, please, 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 please be mindful, be careful. You might even consider waiting until after that in the morning and then let the market digest that moment and then come back and then take your trade. You might miss some, you might miss all, but you also might get a better entry. So that's not a bad idea. Next thing I'm going to say, one quick announcement. We're not going to have a Tuesday night thing next week, although I'm sure my team has got something prepared for you guys coming out, and I'm really excited about it. I'm going to be out of the country for my birthday, actually, but we are starting something within our community. So if you've ever wanted to pass a prop firm challenge, if you ever wanted to truly compound your account, and you have some basic knowledge, like you have to at least have went through the free version of babypips.com, right? You have to have some basic market knowledge. But please do consider letting us know below in the chat, because I'm considering using public results as well. Of course, if you want to be a participant in that challenge, we are going to have cash prizes for participation as well as for success of passing the challenge and or like the lowest drawdown and the highest gain, for example. But we're going to be doing that in our community, and I'm considering how I can maybe do a little bit more with that in terms of live on YouTube as well. We'll see. Either way, I'm excited because I think it's one of the best forms to, as a community, be able to accomplish those next steps. Compounding is what we're really here for. And whereas I'm not a huge advocate of the prop perms because I feel like I have a lot more freedom on my own accounts, seriously, you can make a boatload of money. And we've got one of the gentlemen within our group who's literally passed, I don't know, I think he had 6 or 7 accounts, 7 figures under management. Crazy situation. But I'm really excited to see more and more people be able to accomplish that, take their withdrawals, making money on other people's money, right? And you're still making the other people money too, so it's a win-win-win-win. Not a bad way to be at all. So if you've ever done something along those lines or are interested in being or participating, please make sure you put that in the chat below. And now, let's take a look. Starting from the top, USDMXN. We've already pulled back a little bit today. This is the 4-hour time frame. Please do notice we've got two downward arrows. I'm going to go ahead and just pop up a little bit, make this chart really ugly. We are sitting at a double bottom, right? We're sitting on, this is the 4-hour time frame. If I even go up to some other time frames, we are sitting at a low. We've got quite a few different versions of divergence on multiple time frames, okay? Down to the 1 hour, we've got yet another formation, right? And we're popping to the upside. So, whereas I know, I'm going to zoom in, our most recent arrows are saying to the sell side, I am still looking for this to buy. This has confirmed and gave us the continuation, whereas neither of these 2 arrows gave us the continuation. This did, and it has not been paid for yet. That's one way to kind of filter the entries that we're looking for. So here's where we were, and this gave us the continuation, which is part of the rules. The rules are really simple. There's 3, indicators and then 3 considerations. That's it. That's all there is to it. There's not a bunch of, subjectivity that you have to figure out. It's already figured out. You don't have to reinvent the wheel. But needless to say, here we are, looking for this to continue. So I'm looking for the buy. I'm going to make this green. Mind you, this is US dollar, and we've got some news coming tomorrow that might shake this a whole bunch. I'm not going to wait till the very break of this fractal. I'm going to wait for the continuation on this candle, which already has an hour and 45 minutes. So I'm literally going to drag this down to the body of the most recent candle. I'm going to double click it to solidify that price point, and I'm putting another pending order on this trade to buy it as we go up. Remember, you're protecting this trade as you hit 25 to 50 pips in profit. Your stop loss can be anywhere in this range. Mind you, there is news tomorrow that can definitely spring below that like no one's business and then take off and or break below, retest and stay below. So please do take this very, very cautiously. The markets have been kind of crazy around those interest rate stuff. So that's one trade idea definitely worth taking a look at. I also think this has a boatload of room, y'all. Not to say this is going to get here between now and our next call, but that's a good 400 pips to come fill this void to this next order block area. We have a ton of room, a ton of room. Mind you, I'm still going to be looking for a pretty big reaction after about that 150, 160 pips. When we break this center point, retest and continue, I'm looking for the 400. Until then, 150, that is not nothing. That is a ton of money. On a 0.01, this is a US dollar pair. What is that? It's only like 15 bucks or something, right? On a 0.1, that's $150 minus fees and whatever else. Hold on, I'm used to indices. On a standard, which is a 1.0, one standard lot, that's $1,500, which takes you like 2 minutes to listen to my voice yap at you, and then 2 minutes to go to your trade and set this up, to your charts and set this up. That is it, $1,500. Crazy, right? Crazy. You don't even have to have that much money, depending on the broker you're using, to make $1,500 on this trade. You don't even need that much in there. But anyways, that's trade one. Trade two, Australian chef. Let's see. Beautiful, beautiful. I'm going to say there's quite a few chef pairs that are setting up. Chef JPY doesn't look quite ready, but we're looking for the sell. CAD JPY looks for the buy. CAD chef is looking for the buy. GBP chef looking for the buy. USD chef looking for the buy. We're really waiting a lot on the chef. So again, same kind of concept. We did gap down today on session crossover. But again, same concept. We're looking for this to buy. That gap has already been filled. Bear with me. My system was kind of laggy this morning in class, so I'm thinking I need to reboot everything. It's coming, but I'm going to try to hold out until Thursday. Because when I reboot everything, I have to go through a bajillion brokers, and it is not an easy feat. It is a long-term process. Here's where we're sitting. Notice how there's no fractal here. Our most recent fractals are here, okay? So figure from where we're sitting, your stop loss is at least 50 plus your ATR. That's 71, right? 88 to about 110. So you get 75 to about 110, 115 pip stop loss. Now look where we're looking to take this. Sorry about that circle. I don't know how to take it off of this recording thing. 120, you're already on 1-to-1. We are looking for price to come up into here. And of course, beyond that, we're looking for price to come up into this 260 range. You're a little bit less than a, 2-to-1, right? Not a bad trade, not at all. Not a bad way to be. Also know that this particular pair is worth more than $10 per pip. So same concept on a $200 trade, a standard lot size, instead of that being worth $2,000, it's going to be worth about $2,100, ish, $2,150, $22, somewhere around there, depending on how this fluctuates. Not a bad way to be, right? Easy, 2-minute decision. Next on our list is what? EURJPY. Again, we're waiting on quite a few of the JPY pairs. I was trying to pick pairs that were not equally correlated. So you notice that these three, there's no correlation really between them, not as much, right? So this was one of the better JPY setups that we have. Take a look. We've got our golden ticket, right? This is the JGS. We know what lot size, we know what we're looking for. What if all we get out of this trade is the baby retracement and this doesn't get the huge continuation? Sorry, that was my mouse going wiki wild. Hold on. I'll try this again. Okay. 173. That's my favorite number, 739. Cool. 173. If all we're getting out of this and we're not getting the breakout, you're still looking at about 173 pips. Not a bad way to be. So remember, you're protecting this trade when you're up by 25 to 50 pips or 1 ATR on the 4-hour time frame. In this case, it's 50. Not bad. Beyond that 175, I'm looking for price to come. We're going to get a reaction in here. So I'm looking to get the reaction beyond this point. That's 171, 173. I'm looking to take price all the way down into here, which is 560, 550. That is absolutely crazy. The amount that this trade in particular is worth is a lot. Now notice though, before we get too excited, we have one fractal here, okay? But our next one's up here. The actual structure, so if I go to the line chart and I'm just looking for where structure is sitting, if you go to any one of those little cool indicators that, auto print, structure is way up here. So keep that in mind. Of course, you can opt to have that tighter stop loss with one fractal back, way more doable, but just know that actual structure is way up here. And that's where you want your stop loss typically, is at structure with some room. If you want that way to say, hey, I get 80-90% accuracy, I don't get knocked out, that's structure. This is tight. You do have the option to choose tight, but that's 100% up to you. Last but not least, because I could not hop off and not go through this. S&P, I'm looking for the sell. I was waiting for it this morning, didn't get it. Did not get it in time. US already popped up a little bit, but still within range. USDMX is an exotic pair. Please notice, first and foremost, look how many pips this moves. That's great, but look at the value of those pips. So yes, the pip count is going to be 10 times higher than what we see on the other pip count, but the value is also 10 times smaller, right? Or 10% of, more accurately. But it's 10% of, less than 10% of than the other pairs we're trading. So just take that with a grain of salt. Also a great way to take a huge lot size and learn how to scale in and scale out of a trade, because the value of this is so small. Not too shabby. So let me do this. I'm going to mark it up here. This is an exotic. This should be affected by tomorrow. Something else to consider. Did I do that right? I did not do it right. Hold on. Have to come here. Sorry, guys. Looking for the continuation, making this red. Had to double check myself. Looking for the sell, making this red. Ta-da! Gotcha. One more time, going through all this just to make sure I got it right. Green, buy. Australian chef, green, buy. EURJPY, red, sell. The break of that fractal. And of course, USDMX, green, buy. Now let's measure. Let's measure where we're going. Price wicked up into this area. We didn't really have the oomph to continue to the upside. So even if all we're getting is to come up into this range, that's 2,700-ish pips. Mind you, much smaller value. Depending on your lot size, that can still be worth an awful, awful lot of money to you. So please do consider going to take a look at this. Look at some different time frames. Go put it in a demo account and see if you can see what I see. I'm only looking for the retracement. So if and when we break this high, I'm looking to take it into this range. That is a boatload of pips. Boatload of dollars. That's 8,000-ish pips. Not bad at all. But that's all I've got for you guys today, ladies and gentlemen. Again, please make sure you like, comment, subscribe, click all the stuff you're supposed to do for YouTube. It is helping. Our community is growing, and I'm actually really honored and excited. We have got this little community and this team that is growing, and it's just, these people are hungry, and I'm so excited to get a chance to work with them. And as for all of you guys, I'm excited to see the impact that this can make. I know I've got a couple people on YouTube who have been messaging and who have done these trades and actually are really, really happy about it. So again, please, if you don't have any experience, go to demo and start there. If you do have some experience and you want to do this prop firm challenge or compounding challenge with us, make sure you let us know in the chat, or of course you have the option to join the community, come along for the ride, have a chance to win cash prizes, and it should be a good time. Otherwise, I'll be back in a couple of weeks. Take care and God bless.